All right, everyone, welcome back to another episode of the Dividend Journey here on the Financial Friends YouTube channel. Today, we have some exciting things. The portfolio is started. This is episode number 1. The journey's underway. So I have some maintenance things here to go over before we get started with the true episode, but I just wanted to point them out because they're going to be important as this journey goes along. So not every episode is going to feature a new stock or a new position. This is something that I battle with in my own portfolios, is that I get a little bit antsy. I like to incorporate new positions, new stocks frequently because I get excited about things that companies are doing or things that are going on in the business world. But we need to know that we have to build positions out. So we can't just buy little bits and pieces of every single company, but rather build a nice base for our portfolio and start adding to positions to build them. Especially with only $10, it'd be easy for me to say, well, it's just $10. Let me throw it in McDonald's, or let me throw it in Microsoft, or let me throw it in General Mills, or any of these other different companies that we don't already have in our portfolio, which I will be revealing here in a minute. But we want to build our positions out. So we want to add to X, Y, or Z, which you guys will find out in a few minutes what those companies are. The second thing here is that the portfolio is heavy ETFs for a reason. Heavy ETFs or heavy in ETFs means that I'm investing a large portion of the funds from this account into ETFs. So there's a reason for that. And that reason is stability. Now, I can say that I'm good at picking stocks or say that we're picking nice, stable companies. However, things happen in the stock market that are unexpected. Companies go up in value and they go down in value and they go left and they go right. And ETFs help minimize that, and it diversifies our holdings. So rather than me holding, say, A, B, and C, and those are 3 individual companies, I might be holding A and B, and then C might be an ETF, which holds 50 different companies in it. And so realistically, I have exposure to 52 companies, even though I only have 3 holdings, if that makes sense. And so this allows us to kind of stay diversified and therefore allow our portfolio to be a touch more stable, even within the dividend world, which dividend stocks, generally speaking, are a bit more stable. And so, again, it's going to allow that. Now, I do know that throughout the course of this, there's a few REITs I like and individual stocks that I like and would like to get into. And so I will end up having a large portion of money within those, and I think it'll continue to grow and grow and grow over time. But the beauty of a Roth IRA is we can buy and sell as we please. So we might sell some ETFs off to get into a position, but those will kind of be like our cash parks or our stable, if there's no new positions to add that week or nothing we're excited about or prices are high, then we can get into an ETF, which hopefully will grow and continue to pay good dividends, and albeit grow slowly. But it'll be a nice position, nice place for us to park some money, as well as allow the portfolio to be a touch more stable. So moving off of that here, we will unveil the portfolio. We are going to hop right into this. So I do not have Fidelity pulled up. I don't really think it's too crucial to have it pulled up, but I will go ahead and minimize myself here as we reveal the portfolio. There we go. Move myself down. I think I'm going to pull myself up here up top, actually. There we go. So here it is. Here is the portfolio. As you can see, there is $50. Oh, no. Give me 1 second, guys. I apologize. There we go. So we have $50 here in the portfolio with a dividend yield of 2.01. And we have companies, Apple, which is our sort of growth company. We have Johnson & Johnson. Johnson & Johnson, which is our stable or a little bit safer company. And then we have O as our REIT. And I went ahead and for this first one, I split our ETF into 2. So we have the Schwab US Dividend Equity ETF, or SCHD, and FISROX, which is an index fund that Fidelity offers, and that is total market. So diving in a little bit deeper here, we can see the different yields that our stocks have. So we have Apple here with a 0.59% yield, FISROX with a 1.04% yield, J&J with the 2.56% yield, O with the 3.8% yield, and SCHD with the 2.89% yield. And then I do not think, yes, you cannot actually see how much. You can see here the amount of shares I own, but I will let you guys know that I have purchased $13 of SCHD, $12 of FISROX, $10 of Apple, $10 of J&J, and $5 worth of O. And so those are the breakdowns we have now. You can see our average costs here through the middle, which I think we're relatively good. I know we're a little high here on O in terms of average cost. I'm not super sure about the other ones. I did just go ahead and purchase them. I don't remember what day I purchased them on, but I did just go ahead and purchase them while I was at work, and I really wasn't paying attention. I just was getting the portfolio started. I'm not insanely worried about prices and valuations because, again, these are positions we're going to be in for the long term. So we don't plan on selling any of these positions, maybe other than some of the ETFs to reallocate funds, but for the most part, buy and hold is going to be the strategy here. So we can also see how much annual income each of these is going to bring us here. You know, at the current rate, we're going to have 37 cents here for SCHD, 20 cents for O, 25 cents for J&J, 13 cents for FISROX, and 6 cents for Apple. So I have a little bit of research here on each company or position, and I'm going to kind of dive into that. So SCHD is going to be our again, our ETF, and it holds a variety of different companies, and I actually have here the website. So you can see here the highlights is a straightforward low-cost fund offering potential tax efficiency. The fund can serve as part of a core or a complement in a diversified portfolio. It tracks an index focused on the quality and sustainability of dividends, as well as invests in stocks selected for fundamental strength relative to their peers based on financial ratios. So this is kind of doing that financial analysis of companies for us, so to speak. But again here, the expense ratio is a 0.06, which was very low. 0.03 is the lowest that I've seen in terms of expense ratios other than 0. And that is VU from Vanguard. However, I'm very happy with this. Very minimum, very small. We have a good price to earnings here of 16. I know a lot of people will look for under 20, 25. Growth positions can be way, way higher than that. So we're going to go ahead and we're going to take that. That's good for us. We'll dive into more of these as I learn and as we learn together. These, like, I guess they call them here the fun characteristics, but these ratios and stats. There's 104 holdings here within this ETF, and I highlighted some of the larger ones to be like Home Depot and Merck. So we can hop in down here to the portfolio and see here Home Depot, Merck, Texas Instruments, Broadcom, Pepsi, Coca-Cola, Verizon, some big names that we've heard of before, as well as the diversification within the fund, which is weighted 22.4% financials, 20% information technology, etc., etc., etc. Next up is going to be FISROX. I don't really have anything other than it's going to provide us fantastic diversification. It is the total market, so it is going to capture every single stock in the stock market for us, as well as have a 0% expense ratio. So all of the money that we invest is going towards investments. None of it is going to be withdrew or taken out for an expense ratio, which is nice. Next one we have is Apple, which I don't have anything here on Apple, so we will just go back. We will just go on to the next one here. But so Apple has a lot of potential for us. Apple is, like I said, it's going to be a little bit more growth focused, and I think that over the next little while, this is me personally, as their new chips continue to roll out, that they will continue to be a force that I mean, just massive company. The largest company weighted in the S&P 500, which means it is the largest company within the United States. And so they're weighted high in the S&P, they're weighted high in the total market, and I included them in my portfolio. So we do have a bit of exposure through FISROCks as well as the direct stock Apple. So we're going to have to watch our exposure to them as this continues to grow. So we probably won't continue to add a ton of funds to Apple, the stock itself. And it does provide a 0.59% dividend, which is not insanely high. But again, we're looking more for the growth of this company as they continue to pay a dividend rather than the dividend itself. Next up is J&J, which I have here on Yahoo Finance. So we'll slide over to that. Johnson & Johnson is a stock that I personally love. As you can see here, I am filming this on October the 26th. And the market is still currently open. As you can see, it's only $3.29. The stock is up $1.82 today, or 1.11%. And this is really a company we're looking at for the dividend. So you can see here a 5.29% dividend. It's nice. It's a nice dividend for a company that has some growth still left. They're going to continue to grow, not at a fast rate. You can see here over the past, this is the day-long chart. They've had some good, a nice green day rather. But over the last 5 days, semi-flat over the past month. Again, kind of hitting some lows here, coming back up, but nothing too crazy. Here's over the past 6 months, and we're kind of getting in on this nice dip here. At least compared to, mid-August. And here's the 5-year chart, which again, it does show that consistent, growth. Now, it's not a lot. Price down here is, 111 over 5 years, got up to 165. I'm not so sure if there's been any splits or anything, not to my knowledge at least, but a nice, stable company, well diversified. They have exposure to the medical field. They have exposure to pharmaceuticals. They have exposure to the consumer, medical, and beauty and self-care side. So this is a stock I'm super bullish on and excited about. And I think that it would be a staple in our portfolio for a long time. Last but not least is our REIT. This is one I'm extremely excited about, which is ticker symbol O. And this is called the Realty Income Corporation, the monthly dividend company. And that is kind of their claim to fame here, that they pay dividends monthly. So that is a little bit different than some of the other positions, which we can actually go over quickly before we wrap this video up, which may pay quarterly or annually, semi-annually, etc. This one pays monthly, and it boasts some very good stats. As you can see here, 615 monthly dividends paid, which means for 615 months they have paid a dividend. 96 consecutive quarterly increases, so meaning every 3 months that dividend has raised and went up. They have 6,700 plus properties under long-term net lease agreements, and they have exposure to all 50 states, Puerto Rico, and the United Kingdom. Amazing. Well-diversified portfolio. I mean, you can see here. And they have some of the biggest companies that you've heard of before under lease. You can head over to the top 20 clients here and see that they have people companies rather like 7-Eleven, Walgreens, Dollar General, FedEx, LA Fitness, AMC Theaters, CVS, Home Depot, Kroger. The list goes on. And so this is one I'm super excited about. They pay a nice 3.97% dividend. That was at the time of writing all of this out, and I'm very excited. I'm gonna head over here to track your dividends again to kind of do a little bit more review. But these are the first 5. These are the first 5 positions that we have introduced to our portfolio, and we currently will be sitting at. Sorry, that is my personal one. $1 annual income. But hey, that is the beauty of this challenge, that we are going to be able to watch that grow over time. Adding $10 a week, slowly but surely, we're going to be able to watch that grow. And as you can see here, here's the payout schedule. So like I said, very consistent every single month. We have Apple paying quarterly, Johnson & Johnson paying quarterly as well, SCHD paying out quarterly. And FISROC's paying out once a year. So we will get that in December. But guys, that is about going to wrap up the video, other than I have one recommendation. There is going to be, or I have one thing to ask you rather, there is going to be a post about the next stock recommendation that we should add to the portfolio. I think this will be nice for the first episode to go ahead and add one position, and then we'll add to the rest of them with our $10, $15, $20. I might add a little bit more in there into the portfolio, but go ahead and check out the public. Everything's going to be linked below. The public, or my personal public account, there's going to be a poll there if you go ahead and sign up, and there'll also be a poll over on Twitter. So if you want to go ahead and check out Twitter, the link will be in the description for that, and there'll be another poll that you can participate in there if you do not want to sign up for public, which again I highly recommend. You can get a stock slice valued all the way up to $70 if you sign up with my link in the description. It's free money. You might as well. And with that being said, guys, have a great day.